Hey everyone, it's Zack Beck. Bitcoin has been in the news a lot lately. You might think that it is a scam or you might think that it is a religion. I'm not here to take a side on that issue, but one thing is for certain, it is on a rise right now. Bitcoin is now worth over $30,000, meaning that it has gained over 180% over the last year. For context, the S&P 500 averages a 5 to 8% annual return, so this is significant in the financial space right now. And I want to thank Russell Levine for pointing this out and asking me to create this video. In that sense, what we want to find out is there are various prospects out there for Bitcoin to exceed its value. For example, the CEO of Galaxy Digital believes it is going to exceed $50,000 to $60,000 by the end of 2021, and the co-founders of Gemini believe it has the potential to reach $500,000 as its total value long term. So this is significant. It's an important issue for us to be aware of as investors who want to potentially make money in the market. So what I want to do in this video is break down in detail what Bitcoin is, what is causing this unprecedented rise, will this rise potentially last, and what specific steps you or I need to take if we actually want to move forward and invest into Bitcoin. So let's take our time, dive in the details, and jump into it right now. So what is Bitcoin? Bitcoin is a cryptocurrency created in 2008 by an individual or group of individuals under the name Satoshi Nakamoto, and then it was released in 2009 under open source code. And with that being the case, what's important to understand is that Bitcoin is basically a digital asset currency that doesn't require a central bank. Instead, it can be sent from peer to peer without requiring an intermediary. Bitcoins are created through a reward process known as mining. Now this is very different than if you're going out and doing gold mining back in the day. You're not actually physically doing the process. It is a digital process, which requires a significant amount of computer technology, and you might have heard of these mining farms that exist out in society where they try and create these coins when you're going through an algorithmic process. But basically it's important for you or I to know of that they go through a process called mining in order to create Bitcoins. Now that we understand what Bitcoins are and how they are created, it is important to understand what the value of money or any currency actually is, making sure that it meets certain threshold in order to actually work out in society. For example, one of the things we found with gold is back in the day, gold was very valuable and it still is valuable today, but almost as a hedge against normal currency. And that is one thing we found. The gold rush happened back in the late 1800s and it moved on, continuing on in its own day and age right now. People flock to gold when interest rates are low and when currency is being printed at a very high rate. And what we're seeing right now is a similar process going through when it comes to Bitcoin, as some people are actually projecting that Bitcoin could supplant gold in the sense of being a hedge against inflation and against government issued currencies. So it's really interesting to be aware of. But one thing to bear in mind when we're thinking about this is that if you want to actually have a currency be valuable, it needs to meet certain thresholds. And the first threshold is this: it needs to be divisible. It is very difficult to divide gold up. You can't really shave off that much and make sure it's equivalent in certain sense, whereas if you were to take $1, you can divide $1 all the way down to a penny. So that's one thing you're going to find is with digital currencies such as cryptocurrency, it is very divisible. When you divide up a Bitcoin, it can go down to 100 million, meaning they can go all the way down to the lowest 100 million threshold, which is actually referred to as a Satoshi, which is the same thing named after the creator or the creator group who actually invented Bitcoin. And one thing to bear in mind is that when Bitcoin was created, it was created back in 2008, around 2009 timeframe, which actually occurred right after the Great Recession. And that is because a lot of public trust was being lost due to the issuing of funds going to different corporations, when the bailouts happened, when TARP relief happened, when people began to lose trust in the banking institutions. So what you're seeing now is a similar process happening, because back in that time we issued a lot of money, we printed a lot of money, the Federal Reserve was doing a lot back in those days, and it's doing similar things right now due to the pandemic. We're printing more money, we're lowering interest rates, we're bailing out institutions. So we're seeing this kind of uptick happening right now, but it's important to be aware with any currency that you need to make sure the currency is divisible. Another thing you need to make sure that currencies have is that they are durable. And this is another negative thing for gold, because gold can be easily melted down, mixed with impurities, and have a lot of negative things done to it where you can no longer know if it's actually still valuable. That is very different in the sense when you're thinking about the durability of cryptocurrency or something like a Bitcoin, because it is very durable because it's actually a digital asset. Another thing currency needs to have is rarity, and that is important to be aware of because gold is rare. That's what makes it valuable. In a similar sense, when you think of cryptocurrency, specifically Bitcoin, it is very rare because there's only a specific amount of Bitcoins that have been created and it's capped. So you're only going to find a certain amount out in the world. Therefore, it's going to increase in value because of its rarity. Now, what we're finding is with our formal currency here in the United States, because we're printing out so much money and we're adding so much through quantitative easing, it's losing some of its value. That's why when you invest in the stock market or you actually save money, your money loses to inflation because over time your dollar loses value. So that's just something to be aware of, that when you want to have a good currency, you want it to be rare so that way it maintains its value long term. And that's why when you buy, maybe like an art piece, or if you purchase some sort of other asset that is rare, it can still maintain its value for a long time because there's nothing else like it out in society. Therefore, someone's willing to pay you a higher amount for it. Another important feature that any currency needs to have is it needs to be acceptable. Right now, it's very difficult to go to the grocery store and buy your groceries with Bitcoin or do something else like that. However, that is changing right now because PayPal just announced that they're allowing people to utilize that particular service of Bitcoin to be able to purchase things. So it's starting to happen, and larger institutions are beginning to accept it. So it's actually moving in a target where it's actually becoming more mainstream potentially. And that is very important as an investor to think of, is that if people begin adopting this type of model, especially when we're thinking about digital currencies in lieu of physical currencies, that's even been highlighted more so now, where you're noticing different stores, restaurants, and places aren't accepting physical cash because of the sanitary reasons of it. You don't want to touch it because it's been touched by other people, might have a pandemic associated with it. So that's something long term that actually might trend in the favor of any form of cryptocurrency, whether it ends up being Bitcoin specifically, or if potentially we'll look at long term if we think of something like a Fed coin, which has been talked about in various circles right now, where they're potentially thinking about doing some sort of a government issued cryptocurrency. So it's very fascinating to see what's happening there. But if you do not have widespread acceptability, you're not going to be able to use any sort of currency. The last feature that any currency needs to have is uniformity. This is one of the downsides associated with Bitcoin right now because it's not precisely defined how much value is in each particular Bitcoin. What you will see is that there is a benefit to this particular process because of blockchain. You can actually trace where actual Bitcoins have originated, so where it's gone from one peer to another. And this is important long term because one of the things that people were discussing and were concerned about with Bitcoin in its early stages was issues like money laundering and utilized by criminal organizations, things along those areas. So when you have the process of being able to trace where it comes from, it's easier to understand the uniform nature of it. So just something to be aware of. This is more so for the government to be aware of as they're processing this and understanding these things. But for you or I as potential investors, we want to know if the Bitcoins actually meet the different characteristics associated with currency that is valuable. You might be asking yourself, what is causing Bitcoin to rise right now? And there are various reasons behind this. If you take a step back and look back in 2008, 2009, we had the Great Recession, which prompted a lot of stimulus into our economy. The Federal Reserve printed a lot of money, and then we distributed that money throughout society, generally not to individuals, but to corporations, banks, and lending institutions, which begin to depreciate the public's trust in those institutions. And also because we had to add more money to our debt, adding more money into our deficit, and ultimately caused us to have a more negative position financially as a country. So then we saw the advent of cryptocurrencies, or Bitcoin. So that caused people to become interested. And back in 2017, it actually peaked once and then came down quickly. But that back in 2017 was when really Bitcoin became more prevalently known in society. So people were searching it, dealing with the issue of FOMO, not wanting to miss out. So they began investing into it. And then it grossly came down almost 85% after that. However, since then, Bitcoin has been on a slow but steady rise. Back in September of 2020, it was worth $10,000. Then it jumped up to $20,000 by the middle of December. Now it's exceeded over $30,000, and here we are in January of 2021 with the prospects of it going further. And what we could attribute this potentially to are a couple of factors. Obviously, the pandemic has wrecked our economy in a very significant manner, affected markets in a very abrupt manner as well. But that is also because the Federal Reserve, prompted by Congress, acted through the CARES Act and through other stimulus measures that have recently been passed to print more money, to spend more money, to issue more money to other institutions and stimulate the economy as best as possible. But by doing this process of actually stimulating the economy, by doing quantitative easing where you're printing out money and putting out money into society, you're beginning to see potentially long-term a depreciation of the value of the dollar. Therefore, people are looking at alternative investments that could have a good return and actually be a hedge against the physical currency issued by the United States government. So we've seen that trending in this direction, and large backed institutions are actually beginning to invest into cryptocurrency. They just haven't been as forthright about it previously. For example, BlackRock, which manages over $8 trillion worth of assets, has actually said that cryptocurrency, specifically Bitcoin, is here to stay, and they're putting money into it. Other asset managers are doing the same, and they're saying long term that's actually a good play. So now it's becoming a bit more mainstream in the sense that it's being picked up by news outlets. People have access to be able to invest on platforms such as Gemini and Robinhood and others, so they're actually doing so. And whether or not this is actually going to be long term is difficult to project. I'm just a guy on YouTube not telling you that you should be investing or anything like that, but after all the research I've done, I believe that Bitcoin does have long-term potential to maintain its kind of growth that it's going to have. We'll probably see some sort of a correction, and that's one of the important things to be aware of with Bitcoin is it is very volatile. You shouldn't be investing it as a safe investment. You need to know there's an inherent risk associated with any investment, but all the more so with something like this. But we are seeing that it is growing over time, and potentially as we move forward as an economy where we're relying more on digital assets and wanting to do things cross country and cross boundaries, we might see this become more prevalent in our society, especially as it becomes adopted into the mainstream. Okay, so let's say you've been reading about Bitcoin in the headlines, you've been seeing everyone posting online about what's going on with it, and now you're considering actually taking a step and investing your money into Bitcoin. Now, I just want to be very clear right out of the gate. I am not advising you to do so. I'm not saying that you need to do this or anything to that extent, but I want to make sure that if you've come to a place where you actually want to invest money into it, that you take steps properly and do so in a manner that allows you to do it in a safe and effective way. So there's a few steps and the things that you want to be aware of, and first would be this. The actual place you want to go and purchase Bitcoin, there are various brokerages that you can do it. I've done a bit of research and understood that there's two out there that are probably your safest bets to do so from. One is called Gemini and the other is called Coinbase. These are actually brokerages where you can go and actually purchase Bitcoin from. Very different than if you were going through something like a Robinhood, because there are different approaches and some of the security mechanisms put in place by these specific organizations. So that's one of the reasons why I might go in that direction if you were thinking about doing so. If you take a step to move forward in either of those directions and begin investing and purchasing Bitcoin, you want to make sure that you have to understand that these brokerages need to follow two different rules. One is their know your customer rule, and the second is the anti-money laundering tool. So this is going to require that you share all of your information with them because they do not want any illicit activities or anything associated with the individuals who are investing on these platforms. So you'll need to divulge all that information, and then obviously they will store that securely. An essential step you want to take when you're investing on any platform is make sure that you have two-factor authentication enabled. And that is because when we found back a couple months ago, Robinhood was hacked, people didn't have two-factor authentication turned on, and then money was stolen from them. And I will say the Bitcoin space, or the cryptocurrency space, is even more volatile with people trying to steal money. So you want to be very secure when doing so. Now, if you were going to do this through Gemini or through Coinbase, they don't have two-factor immediately turned on through your process, but you could use an application like Authy and actually use that to link it to your account and have two-factor authentication turned on, so that way you have your information stored away and secure, and hopefully it's less likely for anyone else to be able to access it. Now, if you're going to go ahead and fund your account into either of those institutions, you want to make sure there are various ways that you can do so. You can either do it through a debit card or you could do it through linking your bank account. Now, if you do it through a debit card, it's going to cost almost 3.5% to charge for that. And I would say avoid doing so because you're losing a significant amount of the possible gains that you would have if you're investing with that much money taken off right out of the front. So if you want to actually link your bank account, that's another process that you can go through where you enter in your routing number, your bank account number, etc. Once again, not telling you have to do this. I just want to share you the steps so that way you can make sure you're doing it as securely as possible. Once you've funded your account, then you can actually move forward and begin purchasing Bitcoin, and be ready for the potential for this to be a wild ride, because like we saw previously in 2017, and pretty much with any sort of volatility in the market, you could expect to invest your money and potentially lose a good amount. So if you do this, you might want to think about more of a long-term hold if you're going to go forward and actually invest your hard-earned money into something like Bitcoin. Once you have purchased Bitcoin, then you have the option of either having a hot wallet or a cold wallet. And if you're going to actually do this, the difference is with a hot wallet, your access to those funds is liquid, so meaning that you can access it instantaneously, whereas a cold wallet is going to be more difficult to access your funds, but there are various security measures put in place for both. If you're gonna go ahead and actually have a hot wallet, you wanna look at a brand called BlockFi. This is where you could actually store your finances and store your Bitcoin and actually earn interest over time as well. So that would be if you want the hot wallet approach. If you go the cold wallet approach, that is totally up to you. I probably would lean more towards the hot, so that way you have access to the money. You can actually have your money gain even more over time through some of the interest that's going to be attributed to it according to BlockFi. Now, one thing to be aware of with Bitcoin is taxes. Just like with any cryptocurrency, this is a very new day and age we're entering into, but you will owe some form of tax on this. And that is because you want to make sure you're being responsible and doing everything necessary to make sure you avoid any potential legal issues for yourself. So in order to calculate taxes, there is one application out there. It's called app.taxbit.com. If you want to try that out and actually look at it, you can link it to your account. It's simply an auditor. It's not going to do anything to take any money out of your account or anything to that extent. It will just help you calculate how much tax you'll potentially owe. Now that we have a broad understanding of what Bitcoin is, the steps you need to take to actually invest into it, I just want to take a quick step back and tell you that if you are an individual who's interested in investing, there are other alternatives to Bitcoin that you might want to consider. Specifically, I like investing into what are called index funds, meaning that you invest into the entire stock market as a whole or into a specific index, such as the S&P 500. In addition, if you are looking to invest long-term for your retirement, make sure that you either have a Roth IRA or a 401k open, preferably even both, so that way you can begin securing your retirement. And if you want to actually move forward on doing this, there are various applications you can utilize. I like utilizing Wealthfront. It's something where I have majority of my investments placed into. They go into an ETF or an index fund and actually invest onto the stock market. It's very intuitive and effective, and that to me is my long-term tool to secure my financial future. If you want to go ahead and purchase individual stocks, you can actually get 4 free stocks if you utilize some of the links I have in the description through WeBull and through Robinhood. Feel free to go down there, check those out if you'd like to get free stocks, and you can actually purchase individual stocks that route. Now, picking and choosing individual stocks is very volatile, not as volatile as Bitcoin, but quite volatile, but it's something that's up to your discretion. I like to make sure that as long as you are going forward and have a different investment strategy where you're diversifying your approach as a whole, let's say if you have your retirement accounts already open, you've gone through the process of then opening up a brokerage account, you have investments going into index funds, and now you want to diversify a little bit into Bitcoin, that might be a wise approach. You wouldn't want to do everything into it because that would be probably a bit too risky unless your risk tolerance is very high. And most professional asset managers recommend that if you're going to invest into Bitcoin, that it isn't anywhere exceeding 5 to 10% of your total net worth. So for myself personally, I have not invested in Bitcoin yet, but I'm going to, and I'm actually going to move up to about that 5 to 10% threshold just as a hedge against inflation, as a way to be able to diversify my approach towards investments. But I'm not going to exceed that, and I believe it's the right approach for myself. You might have a different approach that you want to take, so make sure you take your time and think about it. One other thing I want to be really clear about is in the comment section, sometimes on videos, people will maybe try and scam you or try and do things or try and impersonate individuals, maybe like myself. I'm never going to do that or ask anything from you or anything to that extent. So if you see anything that's sketchy in the comments, maybe flag it, let me know, but just be careful because there are a lot of people trying to take advantage of the issue at the moment associated with cryptocurrency and specifically Bitcoin. And I want to make sure that if you're going to go through the process, that you will benefit and you'll do so in a safe and secure manner. With all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please like the video. That would really help the channel out for the YouTube algorithm, help push this video to other people who might need to hear it. In addition, if you have any questions, please comment down below. I'd love to interact with you, get to know you, answer any questions on your behalf, and do any research on your behalf. Furthermore, if you wouldn't mind, please subscribe to the channel. That would mean a lot to myself personally, as I do everything I can to create positive content that will make a meaningful impact in your life by encouraging you and myself to lead lives of meaning and purpose, all while maintaining balance and moderation. And if you do subscribe to the channel, please tap the notification bell. That will notify you every time I post a video, which I do on a weekly basis. Once again, I'd like to thank you for watching the video today. I hope you have a wonderful day. Talk to you next time.